All right, thanks so much, Ritika. Advent International now has raised $25 billion for the second biggest private equity fund on record. Now, the buyout firm, which is majority owned by its partners, took less than 6 months to raise the commitments. Bloomberg's Shonali Basak joins us now, along with David Mussafer and James Brocklebank, managing partners at Advent International. Shonali, I'll hand it over to you.
Yeah, thank you so much, Alex, and thank you both for joining us. David, I'm really curious to start with you here on valuations. You have raised all of this money, but how much of an opportunity is there now to spend it when the market is so volatile?
Well, Shonali, one, thank you for having us. And on a day like today, in a sea of red, it amplifies the potential opportunity that I think we're going to see. Obviously, it's been a pretty benign environment over the last couple of years and a really attractive exit environment. But now, as the market is becoming a lot tougher and cash is more important, that really helps private equity firms and private investors like ourselves. And so we're excited about the potential prospects of some of the dislocations that are happening now and what that might mean for investment opportunities.
James, I'm curious if you can give us the perspective from London, given the economic pressures seen across Europe, especially in the wake of the starting of this war. What do you expect in terms of the outlook moving forward?
Yeah, it's pretty tough. I mean, I think that, it's tough in the States, but in Europe we have even greater issues, I think, with the inflation situation. Here in the UK, we're looking at pushing inflation topping 10%. We'll have real negative GDP growth next year, potentially. We've got the supply chain shocks post-COVID plus Brexit. And then, in countries like Germany, where you have this very difficult transition away from imported oil and gas, you will have potentially structurally higher energy costs for many, many years to come. So we're dealing with a lot of difficult things right now, and the outlook is tough. It's tough. But I think, here at Advent, and we've been on the ground in Europe since 1989, so we really feel we understand the market well. And, we're looking forward to trying to figure out ways to support our companies through this difficult period.
James, what is looking attractive at this point here in the UK and in Europe as well? We're seeing a lot of focus on some of the grocers, the big name grocers here in the UK and more broadly across Europe. Questions again about bank consolidation. What for you is looking attractive in this environment?
Yeah, I think there's still a lot of opportunity in the carve-out space. So, we have a pretty inefficient landscape in Europe. A lot of larger companies are looking to trim their portfolios. We think there'll be a lot of opportunity to continue to back interesting potential carve-outs. We've just done one of the largest ones of recent times, which was the Lanxess DSM deal, which we announced a couple of weeks ago. We've done over 65 carve-outs during our time in 22 countries, and I think you're going to see more of this activity, quite honestly, in Europe coming up, and we would certainly like to be involved in that.
And David, bringing it back to you, and you talked about the dislocations. No, I'll let you in, David, and then a question on dislocations and where you're seeing those most acute and where that opens up opportunities.
Well, what I was going to emphasize is that when you see the when the public markets adjust like they have in the last several months, it puts an immense amount of pressure on CEOs. And so, as James was saying, the opportunity for carve-outs is because CEOs are under pressure to raise their stock price. And that's what triggers these immense carve-out opportunities. And like James said, we've done these successfully with GE, Walmart, Visa, ThyssenKrupp. And so this is something, in addition to more straightforward P2Ps, that are also going to be opportunities as a result of the reset in the markets.
David, you started to address the issue of exit opportunities with the choppy market, the IPO market being closed for so long. What do you see in terms of exit horizons, and are we going to see more sales rather than IPOs ahead?
Well, that's for sure. So the IPO market was down, I think, 90% or so relative to last year in the first part of this year. So for sure, the exit markets are going to be a lot tougher. And so most investors are going to be thinking about deferring that for some time as you reset their businesses. But again, for us, we're thinking always over an intermediate term, anywhere from 5 to 7 years, and then really making sure that our companies are well prepared for the environment that they're sailing into. And that, as James framed, the environment over the next couple of years could be pretty rocky. And so we want to make sure that our companies are well capitalized and prepared with lots of resources to take advantage of any of those difficult situations.
You know, speaking of capital, also, James, I'm curious about your opinion. There's a lot of talk out there about the health of banks, the massive amount of LBO loans on bank books right now. And when you think about buyout capital to get businesses through the cycle, do you have any concerns that the money will be there over the next 6 months, especially from Europe, where the banks are a bit weaker?
That is a great question, Shalani. We're definitely seeing a little bit of a dysfunction in the leveraged loan market right now. As you say, the banks have got paper on their books which they're needing to move on. The CLO market isn't functioning that well. And so you have a situation where it's actually really difficult and expensive to find financing from the traditional sources of the bank. The direct lenders are obviously there and they're still very active. The boot's on the other foot somewhat, so terms are expensive. But you're right. I mean, right now, leveraged loans, it's really tough out there. How long this will last, we don't know. I think obviously you'd like to see some more CLO formation. That would obviously drive an improvement in the situation. But right now, it's really tough to get financing in the traditional manner.
David, I'm curious also about hiring in this market. You've made some really high-profile hires. Most notably, we reported that you've hired a new COO from Goldman Sachs. I'm wondering what your plans are moving forward. Is there still any sense of a war on talent, given that this market is softer than we saw a year ago?
Well, I mean, for us, the key to everything, both internally at Advent and with our portfolio companies, is our ability to attract incredible talent. And that's one of the things that, as we've grown with our size and our scale, it's given us the ability to attract incredible managers. And so look at last year when the SPAC market was wide open, lots of CEOs were being drawn to SPACs and other vehicles. All those executives are starting to come back to us. And so we're finding an immense upsurge in talent that we can attract to our portfolio companies. At the same time, internally, we're always looking to raise our game and bring the best and brightest into our shop. And we're thrilled about Heather Miner, who you mentioned from Goldman, who's joining us later this year. But we've got a host of talent that we've been able to attract. And obviously, that's what we're trying to lean into during this market.
James, let me bring it back to you and the big question of the day, really, which is around inflation. You both touched on this. How are you thinking about the stickiness of inflation, the longer-term trajectory of inflation, and how you factor that into some of the businesses that you're looking at over that 5-year horizon?
Yeah, it's very interesting how economists and central banks kind of underestimated the inflation situation. And when we did a big study on this earlier in the year, it was striking how people were all assuming it'll go back to like 2% pretty quickly. We don't think that it will do that. We're planning for a longer period of inflation. And it's absolutely the top topic that we discuss with the boards of our portfolio companies. We are extremely focused with these guys on trying to deal with pricing, put in the contracts which have recurring pricing increases, really focusing them at almost creating a sort of particular work stream around pricing, because the DNA around inflation just doesn't exist in many companies, just because we haven't seen it in Western markets for so long. We also have benefited from our colleagues in Latin America who have seen inflation in some of their geographies. And so we've been able to learn from them about how they have navigated these difficult times. And this is, again, an example of how a very international organization can be used to help drive insights in other parts of our business.
Okay. Shanali Basak, thank you for bringing that fantastic duo of interviews to us. Advent International's David Mussafer, of course, and James Brocklebank, having raised a near record $25 billion, one of the biggest funds in history when it comes to private equity. Coming up, President Biden will be visiting the port of Los Angeles.